Good morning. Welcome to this morning update on Wednesday, the 14th of June. I'm Tom Colley, and I'll be taking you through the news and the charts this morning. Only one subject on the news still, and that is the FOMC funds rate, or the federal funds rate, this evening at 7 p.m. We've been waiting for this for days. Probably the most significant part is going to be the press conference at 7:30, featuring Janet Yellen, the chairman of the Fed. We'll be looking. Well, we don't expect any rate increase this month following the very poor non-farm payroll numbers we had the other week. We will be looking for indications of when that rate rise may occur, or at least a continuation of the hawkish rate rising stance that Janet Yellen took almost immediately after those poor figures, suggesting that they were an anomaly rather than being the beginning of a move in the wrong direction. Okay, back to the more general news. Yesterday we had the pound CPI coming in below forecast. We had retail sales in the States coming in just ahead of forecast, which is seen as a significant sign ahead of the Fed meeting. Bear in mind that the Fed meet over 2 days, so they were in the meeting when this information became available. Before the Fed announcement today at 9:30, we have the average earnings and the claimant count relating to unemployment on the pound, manufacturing sales from Canada, and then from the States PPI. And if you're trading crude at the moment or looking at crude, the crude oil inventories, which is important information, out at 3:30. And then at some point in the afternoon, because it's only listed as we have the dairy price index for New Zealand, which again is critical for that economy. If you're looking at trading that, that's something that you want to be aware of. Going forward from the Fed announcement tonight, that's going to be the big mover of the markets, presumably, but over the same from the Bank of Japan with their monetary policy statement, and followed by a press conference. Will they react to what the Fed say? Obviously, we'll be waiting to see that. Then, in first thing in the morning, or UK Euro time, at 8:30, we have the SNB, the Swiss National Bank, with their rate announcement and subsequent press conference. They will currently be concerned about the strength of the Swissy, particularly in light of fears of Brexit, that will cause a drop in the value of the pound and the euro, strengthening the Swissy. We may also see a risk-off scenario in the equities markets, with money leaving European equities and heading for the safe haven of the Swiss franc. 12 a.m. or p.m. midday, we then have the Bank of England rate announcement. Now, we don't expect anything out of this pre-Brexit. I consider it somewhat a formality, and I'm sure that Brexit will override the comment that was made here, but I should imagine that Mark Carney is specifically trying to avoid making any comment ahead of Brexit, which the vote is only now the 23rd, which is next week. So that's coming up very quickly. Okay, over to the charts. The Far East as usual. Well, we've seen a sell-off on the Nikkei in the last few days. We've had a bit of a recovery today, or in the overnight session, their daytime session, ahead of the expectation of the Fed meeting. The Shanghai Composite, again, they've had a strong down day on Monday. However, today or overnight, they've had a very much bullish day. Again, this is probably what we might see across equities as a whole today. We'll see we've had a sell-off, and now we'll be having the pull back prior to the Fed meeting. The US dollar JP, the yen, well, we've had yen strength of late into this key level at 105.50. The market has reacted to that now and is climbing which means we've got a very slight yen weakness. That would be reflecting what we've just seen on the Nikkei, where we've seen a bullish move on the Nikkei, so we're seeing a weakening of the yen in comparison. Over on the dollar index, well, yesterday we had quite a bullish day. I think I said in the morning update yesterday that we probably would stay within the range of yesterday's or the previous day, Monday's bearish bar there. However, we ended up with a nice bullish close. We will be waiting on this, obviously, to see what happens with the Fed meeting. If we get something positive in terms of rate announcements going forward, or a really hawkish stance, we can expect to see the US dollar break through this 95 level here and the channel, and then we finally head off north, which is what we've really been looking for all year. If the Fed in any way the market's expectations with regards to sentiment on rate changes, I'm sure we'll see a return to these lows here. The critical low being right down at this level, I think that's 92.50ish, something like that, where the close and the open of those bars are down there. I think if we see a break of that, then we can definitely say that we're into dollar weakness rather than dollar strength. Over on the euro, well, we're consolidated within a triangle. We're towards the lower side of that. Obviously, if we see dollar strength, we're going to see a breakout on the downside to that. If we don't get that dollar strength, we're going to continue, I'm sure, with the uncertainty and price bouncing between these areas until we see Brexit next week. Brexit may dominate this, in fact, to be fair, more or certainly as much as the Fed today, because undoubtedly if the UK votes for Brexit, that should have an immediate negative effect on the pound. But we also anticipate the same on the euro, because the harm or the problems could be perceived at both parties in the agreement or the breaking of the agreement. So we could see that, as I mentioned earlier, a negative effect of there and a run to safe havens, which in Europe tends to mean the Swissy on a currency level. Over on the pound, well, we've been getting negative opinion polls over the last week to 10 days. The pound's reflecting that. It's clearly moving to the downside, weakening. We have had a lot of volatility. Last week we had this spike down. That spike up was in a 2-minute period. So caution if you're trading these markets. I know some of the Phoenix Blue traders are just taking a bearish stance on this market and are trading it at relatively low risk intraday. That's something which, you know, if you're looking to do, you want to be doing with caution. But everything today needs to be done prior to mid-afternoon with the pending Fed announcements. In an ideal world, any trade you've got left on will at least be at break even, without any risk on the table, because it is particularly unpredictable. Over on crude, well, we've seen more of the downside, crude selling off. We're down and around about one significant level here. There's another level up there. We may now see a pullback before further downside, but we're still looking for a pullback in this market to the level of around $42 down here. Over on the S&P, well, we had two significant bearish days recently. That came to a halt yesterday. The market pushed back up. I know Phoenix Blue traders took trades at the bottom here, and they're looking to trade that long up to this level of around 2085, where you'll see my order, where they've reverse orders to reverse their trades straight back down to the downside. So our bias here is on the downside at the moment. If we are in any trades prior to the Fed announcement, again, we want to have those with stops at break even, so we've got no risk. So if it goes in our favour, great. If it goes against us, nothing lost. Clearly that order there, if that hasn't triggered prior to mid-afternoon this afternoon, I will close that order on that basis. Okay guys, that's the end of the video today. As always, this is Phoenix Blue pure analysis using clean charts. We trade FX normally with 40 pip stop losses, which means you can be profitable with a smaller number of winners. If you've got any questions about this video, please email us at info@phoenixblue.co.uk. You can get more information on the website. Some of you who may be listening to this hopefully will be coming to see us this afternoon. We have the free workshop in London after our normal boot camp in the morning, and we look forward to talking to you there about the possibilities of what we might be able to do to help your trading. If anybody is interested in coming and talking to us, it's too late for today's event, I'm afraid. Subscribed, but if you go to the website or send an email, go to the website. If you send in your details there, even if it still says for the current event, we will automatically contact you and either offer you the next event, or we will look to arrange a meeting in the intervening period. Okay, have a great day's trading. Be cautious. Have your eyes open for the Fed this evening and Bank of Japan that follows overnight. And hopefully we'll be coming back to you in the morning and we might have some more definitive direction in the FX markets. Okay, thank you. Goodbye.